Welcome to the new year. Today's video, we're going to talk about Model 1 by adding some more details from what we previously learned. Quick recap. Basically, what happened with this model is that we're going to see price tradings with PDRA, then which is usually PDRA is usually like the hard time frame ones. We're going to see a reversal pattern forming, which either the stop hunt or failure swing on the intraday time frames. And then we want to see a breaking market structure signified by a close or by the body close above or below the low, and then on that leg we're gonna see, or we're gonna get the entry or discount of that price leg depending on whether we're bullish or bearish. Now in today's video, what I'm gonna do is I'm gonna add some more details and really on the breaking market structure here. But what's actually what you're supposed to see actually breaking market structure, but a shift market structure. I'll show you why. A valid market structure shift. Of course, I've previously talked about this when you call the market structure. Market structure, teaching about the difference. Oh, but today I'll show you that's what the model is. Valid market structure shift is have energetic and rapid price movement that leaves gaps in price. Basically, in most simplest, what I want to see shift in market structure for only valid when the price moves so quickly that it leaves gaps in price. So this here is an example of a bearish market structure shift. This will be a bullish market structure shift. What is price moves so quickly, gaps in price, not a gap but a gap. And you can see by the long range candle that prices move very quickly. And for definition here for you, displacement refers to significant price movements that indicate structure, right? Highlight that. So it signifies a shift structure. That's how you know that they shift in market structure, displacement and price. Or when you see price moving, you don't get displacement times. Or let me put it in a contrasting way that regular market structure doesn't necessarily have to have displacement, right? This can just happen, price break structure, but without moving quickly or without any displacement and without any price. That's going to be the difference. Major one, in fact. So this movement should not be small or lethargic shift, but rather a clear and energetic move beyond previous high or low. Right now, we're going to look at some examples incorporating what we just talked about here, displacement, right? Up the whole process a bit. Because what I do is I'm gonna assume that you already know how to determine your bias and the narrative as well. Basically, what I'm showing you is examples. I'm going to show you the high time frame PDRA, and then I'm going to show you how the model formed on lower time frame. For this first example, F is a balanced price range. We're going to look at the first time that we tapped into it, though price did not sell for a long time, a few days, like 3 days. So price taps into the balanced price range, below that price range, and how price was displacement. And when we close below the low here, then that's where we have our shift structure. And then the next step in the process will be to measure that leg where our premium is, and in premium, well, that's where we'll find our entry. So it's whatever we get. That is how that trade would have went. Next example will be second time price trades in that balanced price range. daily range. What we're seeing here is price actually a bit lethargic as it really into the high of the balance price range. But notice prices are going higher, like high highs and higher lows. And so what you're doing is, or what you're doing, wait for the time the price shifts in structure, which shows you that um then show you that there's been a change, order flow from bullish to bearish, right? And of course, the most important signature in price you want to see is displacement. Get right about here. This is where you have your structure. Of course, you can mark the low here, right? Better, but what matters is this is the point in time where we get displacement, which is actually when price to show nice time bearish opportunities, or I mean bearish setups. Measure that leg and you get your premium levels, and in your premium so you find your entry at better whether you take the very gap here or those two up candles bearish order block, but that's you get entry in premium, right? And this is pretty much how the trade went. Entry over there, rest is history. Yeah, of course, after this finish shifting structure you'll notice that then price would begin expansions inside of the range. Now there's been a change in the order flow previously, or in the on this side expansions going higher, and then when the structure we see expansions go lower. Next example, when I look at this high over here, after price to go this buy side liquidity price the model. Notice this one is actually different. Here's example that we just looked at. In fact, when price took up buy side liquidity lately, we structure the displacement down and price getting price now spend a lot of time, meaning amount of time and really above the high, and just the liquidity immediately we have a shift structure and a change of direction and the expansion side of the range. There's a large range candles that have gap in price that signifies a shift of the structure. Now that gap is actually large, so and so I'll probably go switch like 30-minute time frame so that I can the whole area can be consolidated, and when I 30-minute time frame you see much smaller favor the gap, and you mark that is your level. That is pretty much how that trade went, right? All the way from there and opposing side of the range, like sell side liquidity. And we're gonna look at this point in time here, the price, the sell side liquidity, bought all the way to buy side liquidity. I think I forgot to mention about this price section. It's ready in case you want to review it. Like in now, price to go sell side liquidity. Notice that we did not break any structure, okay, till point in time here, but it wasn't breaking structure, right? There was displacement, signifies a mega structure shift, change, and the order flow. So without structure, and because of how big that range of price is, sometimes they may want to price to consolidate, price to less gaps in price. Like when you move to a higher time frame, this whole have like three is when you higher time frames, sometimes they either disappear or start to consolidate into one, while move between 30 minutes, 30 minutes, one that, and mark your range where is that in this one. You also have that bullish order block, and if that's where you entry at, how it would have went. The next example, and again we take a buy side liquidity down, right? But when I look at it in time frame, this is a case I wouldn't have been any trade, or wouldn't have met the requirements that we want to see back inside the range, or want to see displacement simplify and shift. Here we just have a breaking structure, but no, we don't have a structure of gaps on this particular time frame, the 15 time frame, right? Case layout, right? Wait for the next opportunity. How far away? Crash to get high, go to give us entry. Wanna see when price retreat that fabric gap if there actually was an entry that we could have been a part of at that point in time. Well, there's a value gap. So when I switch to the 15-minute time frame, and on the 15-minute time frame, see price heading to that fair value gap, and high, low, high, low. But notice again, we still don't have gaps in price. So this is not displacement. Though price might have broken structure here, it is not displacement that we're looking for. So this is not where we have a shift in structure. Still waiting and price to trade up, and then right there, that is where we have a shift in structure because we have gaps in price. So with gaps in price like this will be our displacement leg over here. This will be where we have a structure. Now start to look for bearish to go bearish in premium of that leg. So we measure premium in this kind of that. It is a bearish order block over here and over the gap as well. You can take your entry wherever you're comfortable with, really. That's how it went. All right. And for the final example, price trades to this bullish order block on the daily and buys to range on the buy side. In time frame, but we see price create lows, right, and then tapped into that daily order block, and then we have an expansion higher, but we don't actually break structure, right? Notice here we don't close above. I mean, not break structure, but close above. We do have one of the requirements, sort of the requirement displacement. We have gaps in price, but we don't have close above that high, right? The price close above, and then here get displacement again. What price closes above those highs. So this is where, or this is the leg that would take as my market structure shift. And so I'll measure that. So if you take it from the low to the high here, it does not reach down in the again. Do that until you get price retracing down into discount. So in discount we do have this bullish fair value gap. Yes, you get that. As your entry, go bullish, right? And how it turned out, right? Go over here, arrange on the daily. Alternatively, it actually entry, or you could use the breaker block as your point, or as your entry, right there, which is in a way in line with that fair gap as well, right? So the breaker block was actually validated as part of it. It's also I would have thought enough. So then now we're gonna look at a different period. We're gonna look at fair value gaps, right? Reactions, fair value gaps, price traded down to, and then expand it all the way to buy side of liquidity, right? Step into the lower the fair value gap. You go lower, price going down, fair value gap all the way to the low of it. We don't have on that side of the range, we don't have high to low specifically, right? Price to break. So what price does is create a high, and then we shift the structure over there. So we take a fib to then put until we react a retracement all the way down to discounts. Here, discount fair value gap over here. That's where you could take your entry. Alternatively, you can also take on the mitigation block, right? But our price went, so it went all the way to external range liquid. Spoke about. So all this is always a couple of days. I don't know if you notice, by all these entries, they all span or takes couple of days for price to reach targets, because this model is primarily a swing trading model. It's not a day trading model. Let me say its very frame foundation is that uh usually the hard time frame context, and when you have hard time frame targets, you usually take a lot, or no, not a lot, but a couple of days to target. Um, so it's not like your intraday or your day trades where you're in and out on the same day. Really, um, they actually naturally swing trades that you would take from this model, right? Get the next example. So in this particular case here, do have a large bearish pivot gap over here, and actually price to trace up to it. Initially had price consolidating as a result. This is the daily, so I want you to notice that we consolidated, or we price went deeper into the fair value gap, right? So I ignore this part because then price did not go or did not expand away from that fair value gap, right? I look at time that it traded into the high, the fair value price tapped that high, the gap, right? Displacement gaps in price, they close below the low within market structure. Then the next thing you just measure with the fib, and you have your premium fair value gap over here. That's the entry. That's why you take your entry, then it's a side return out, right? So all you gotta do now is backtest. You can also backtest the previous 2 months in January and December, because that price action was very tricky, even for most people. And actually, even though it's not conducive for trading, um, that's kind of the type of price action you use to build up your muscles, right? To train yourself in the concepts, because it's not always gonna be easy. So then the hard stuff. Yeah, I hope you enjoyed. Until next time.